Welcome back everybody to the Nomad Hedge. In today's video, we're going to list 3 stocks that I believe are looking attractive from a technical standpoint. And so we're going to take a look at that. If you haven't already, consider liking and subscribing to this channel, and let's get into the video. So first of all, we're going to be taking a look at the overall market, and then we'll switch gear and have a look at the 3 stocks. So for now, we can see that the S&P 500 is eagerly trying to find support right at this level, right? So this is the anchored VWAP from the lows right here. And it looks as if we are within wave 3-4 and that we could see a last push here towards wave 5 potentially. I'm still open to the idea that this indeed could have been wave 5 already and that we could see a larger correction. Basically, what we're seeing here is a retest of this trend line. So that's what market typically do before they head lower. But again, we could also head higher here. And that is why from my previous video, I mentioned that we need to have a look at the 0.618 retracement level, because if we were to breach this one, the market could begin to correct further. If we're finding support here and moving up higher, which is a strong likelihood, I would suggest that we would start piling into stocks that are looking attractive from current levels. So that was it with the S&P 500. We're going to start off by taking a look at ARM, which is ARM Holdings. And this is basically an ADR. As we can see here, we completed 5 waves of wave 1, 2. You got a strong correction into wave 4 and then 5, right? And then we've had this correction down to the Fibonacci retracement level of 0.618. Now, I would be a little bit cautious here because we can't really see any alignment of this current price level, meaning we can't see a retest of a moving average. So the only thing we're looking at right now is just a 0.618. And this is basically a stock that hasn't been trading for a very long time. It started trading back in 2023. So all these moving averages, they haven't really catched up or, seen some progress. And that is why we just have to rely on the 0.618. We could plot the volume profile as well, and we're not seeing much from that either. So, this offers a good risk reward right here. And so if one would enter, it's still pretty cheap. Considering how much this thing has corrected, I would say if you're looking at this and buying it for the long haul, this could be a very good starter position and just hold it for the long term, right? But if you're going to trade this thing, you might want to take a look at levels prior or what comes after the 0.618. And I would say if this stock would start to breach these levels here, I would be cautious and get out, basically. Look at the 0.618, gauge your stop levels. I would say anything around here. If you do have some more room towards the downside, look towards this 0.764. And if we're starting to breach this level here, I would get out, basically. But this would be my, or the pivot, I would say, for getting out. So this was ARM Holdings. I think that this level looks attractive here. We're going to move on and take a look at MicroStrategy. And this is an MSTR ticker symbol. This thing has been on a massive tear. And, a lot of people who buy stocks like this, they end up buying at the top, right? And then they get crushed. And so when they look at a stock or a price level like this, there's no way they want to get in. Okay, so if you would look at this and say, okay, well, is this looking attractive from current levels? Well, if you take a look at the correction we've had for MicroStrategy, you can see that we have potentially completed an ABC correction down to this 100% extension. And we're also below the 0.618, so it sort of like aligns with the 0.764. But if you take a look at where Bitcoin is right now, the S&P 500, if we're starting to pile up and break out to new all-time highs, I would say that MicroStrategy would likely bottom from these current levels. So again, for the long hold or for the long-term hold, I think this would be a great area to start a position for MicroStrategy and just keep it. If you're just aiming to break to more new all-time highs or maybe aiming for wave B, that would be a tradable setup as well. So the 0.764 alongside the 100% extension offers a great risk reward in my opinion. And where would I put my stop? Basically, I would look towards this area here. If we're starting to breach these levels here, I would start to get out, in my opinion. But if you can manage volatility and you're looking for the long hold, then you just hold it for long term and don't put any stop loss at all. So that was it with MicroStrategy. And the last stock we're going to be taking a look at is Toll Brothers. And this thing, I do believe that it's completed its correction. The reason why I say that is if we plot some moving averages here, we can see a test here, the 233 EMA. Okay, so we look at the Fibonacci moving averages here, especially the exponential ones. And the 233 EMA is basically a level where we want to find support. Now, you could take a look at this and say, okay, well, maybe this is an impulse where you have, 1, 2, 3, 4, 5. And that would mean that this would basically be an A and then B. And then we're looking for a last correction down to C. So that's also a possibility. But given the current price levels we're seeing here, we managed to get above all these key moving averages here. If you're looking for a stop, I would just put it right there. That means you would breach all these moving averages here and just get out from these areas. So I think that it offers a good risk reward from this level. It's finding support here. It's trying to find support right at this POC line from the lows. And that is why, I think this could act as support for now. And if it were to breach these moving averages, again, you would just get out at these levels here. I would say at around $133. That's your stop. That's basically it for these stocks. I thought they were, looking pretty attractive current price levels, especially ARM right at this 0.618. And then if we take a look at MicroStrategy here, right, this 100% extension where we, potentially have completed an ABC correction. So once this thing starts to gain support, it's going to rally pretty hard and you're going to miss it anyway. So that is why if you can manage this thing for the long hold, I would consider looking into MicroStrategy at current price levels. That was it for today's video. I thought these were stocks that are looking attractive here from a, Elliott Wave perspective, the technicals. And so you can follow me on X. I post a lot of things there. And if you want to catch up to some of my daily, thoughts and considerations about the market, I'm going to make another video tomorrow. And I'm not sure exactly what I'm going to have in mind, but these were some of the more interesting things here to discuss, especially stocks to watch. So thank you for watching if you made it this far, and I'll see you guys in the next one. Take care for now.